Hi everyone, delonewolf here, and welcome back to EVE Talk, your weekly look at the market in EVE Online. For EVE news, well, not that much. We did get the Minmatar Liberation that's now starting, which is like a whole event with a reward track, so you can grind your way up to all of the rewards, skins and things like that. It's pretty cool. It definitely gives us Care Bears something to do. I would say on the other side of the EVE universe in nullsec, we get some rumblings. I apparently am picking up some rumblings between Brave and Fraternity, which could be interesting. It's good to see that the nullsec politics are alive and well, and that the potential for conflict there definitely exists. We'll see if that escalates to anything. And then on development news, well, not a lot, of course. CCP did announce that they're gonna do streams over the summer, talking a little bit about stuff like the Photon UI, but also at the end of the summer, of course, they're gonna do a stream about the faction warfare plans that they have. That could be very interesting. It does feel a little bit like a delay tactic, but I've mentioned that quite often. In my experience, summertime is not the time when CCP can work on all cylinders, because it is, of course, uniquely light with the midnight sun and things like that they've got in Iceland, that during summer lots and lots of people naturally take vacation rather than during winter when they've got maybe a couple of hours of sunshine. So it's fully expected, and I do think that if you want really new stuff to come to the game, you'll have to wait until after the summer. But overall, of course, that means that we get some more time to prep, to get ready, and I myself have cleaned out, I would say, a Mars space, and I'm now gonna start to work on improving and getting ready in Galente space for my personal characters. So let's take a quick look at the New Eden store, see what's happening there this week. And we've got new skins, which is the Chainbreaker Kumak skin. So Minmatar skins look pretty cool. I like the yellow and then red, gives it an industrial, also gives it a little bit of like homeworld vibe to me personally. So I think it's definitely a pretty good looking skin. And then other than that, we don't exactly have anything sale wise to report. No sales or anything like that. All right, that means that we can move on to the market and get started with the pilot services coming in at 240. Like that, let's go to those pilot services, and of course we will start with Plex. You may already have seen that on the ticker, but we have started an upwards move, which to me is a little bit of a surprise. Of course, we are July, the summer has started, and you would expect that downward trend to continue as the summer slump intensifies, but no, could be that supply is also straining at this point. If you've got to go and pay for an expensive holiday, you may not have that much cash left to invest in Plex in EVE Online, but we are on an upswing, heading back to 3.75 million for the daily average price. It's 3.9 million for the sellers and almost 3.7 million for the buyers in GDA 4.4, and I don't expect a lot of movement in the player on trade up. Yeah, a couple of sellers a little bit below 3.9, and buyers are going up a little bit towards 3.7 as well, but really that is the current range for Plex, which is of course very expensive on this 1 year chart, which is historically pretty expensive as well. But the dollar cost or the euro cost or whatever currency it is that you have to use for your subscription is also, of course, at an all-time high. So this is not abnormal. I would say there is the chance that the rumblings in nullsec are increasing activity a little bit, and that some people are basically wanting some extra Plex to get their character into a potential conflict, and that might drive up demand a little bit as well. Then we've got the multiple pilot train certificates, I would say also starting to go up quite substantially towards a 1 year high point. Probably still a slight catch-up move as these volumes are finally going down as well. And I would say everything here is normalizing, and the strong correlation between Plex and the training certificate is going to really start to take over. With the daily volumes going down the drain. 1.6 billion for the sellers, above 1.5 billion for the buyers. Clearly a real shift here, and I think this means that those final reserves from months ago have now basically been chewed through, and we are here. This is active supply, active demand. We could see a little bit more volatility on the upside here as Plex is might also break out above 375 and make another 1-year high point. Skill extractors should follow that quite closely, and well, it's not that convincing, but you can see at the tail end here that 5-day moving average starting to go back up as well and cross that 20-day moving average. It's not the 1-year high point just yet, but I would say that compared to the plex chart, the amount it fell back is a little bit less. And as a result, I think that slow upward trend is basically also a catch-up with the correlation with plex, just like the trading certificate. 434 million for the sellers of skill extractors, 432 million for the buyers. That to me does show pretty strong demand and quite a bit of interest for skill extractors at the moment. In fact, some of you guys mentioned that in comments as well, that you've actually been looking at looking at your character. Are there skill points that I would say I'd never use, and then extracting those in order to create some value. It might just be happening at the moment, people trying to lighten up everything, get ready, get the funds that they need for whatever it is that they want. I think it's pretty interesting. I'm basically in that mode myself as well at the moment, although I'm not extracting. I still think that I love my main character with all the skill points in it. I can understand trying to get rid of some of the stuff that you don't need and basically be mobile, be ready with all the resources in the right places at the moment. So I would say that could be what's happening here a little bit as well. Strong demand for skill extractors. And then we get the skill injectors. Here are the large skill injectors, topping off a little bit, but it's quite relative, of course. 1-year high point of 800 million ISK bumped into over the last week, so we're just losing ground a little bit on that. 20-day moving average stopping the increased price here as well. Well, eventually, of course, volumes go down and there is a limit to what the market can take, and it looks like 800 million is very difficult for the market to absorb for a large scale injector. 800 million for the sellers, 754 million for the buyers. So if buyers above 750, that is quite expensive. So buyers are above just your sale prices for early June. This clearly is also, I would say, the impact of the increased plex prices that is finally being fully absorbed into the market. And the plex and the skill extractor part of the large scale injectors are now going to start to move in tandem with active supply demand, which is of course a step up higher from what it was before the increased price for services in EVE Online. Then we've got the small scale injectors that are doing the same thing, went to a 1-year high point just a couple of days ago, 160 on the chart, and we're at 162 almost for the sellers, 148 million for the buyers. Looks like a little bit more margin here. We have mentioned that the small scale injector market, although it's just basically a number of small scale injectors make up a large scale injector, it has, because I think it's smaller price range, it has more volatility to it, a little bit more volume. And from time to time it really moves in a slightly different way from the large scale injectors. Not that it's super tradable, especially not in these conditions. It's not like you can invest in large scale injectors and then make money on small scale injectors or anything like that. But it is a slightly different market with a slightly different vibe here. Basically already moving sideways on that plateau. And then of course, in my opinion, it's going to be interesting to see if plex can make a breakout towards 4 million, which I think would be a sign that in nullsec there is also increased demand, increased need for stuff. Then this could just be a pause and we could actually see even higher prices over the summer. On the other hand, if the summer slump really materializes, that could put downward pressure on the price of all of these services. Then we get the daily alpha injector that tried to go back to 50, didn't quite make it, then went back down just a little bit, but is basically stabilizing at, I would say, still a reasonable price for CCP, but also a relatively expensive price, of course, for those alpha players that need to earn 47 million on a daily basis in order to buy a daily alpha injector, and buyers up to 43 million, well above 40 as well, it is quite expensive. So at the moment the daily alpha injector is still in an okay place, but same story here. I would say if there's enough interest and potentially nullsec activity could be the catalyst for that to get through the summer, then I would expect higher prices for the daily alpha injectors and perhaps even a CCP intervention. If the summer slump wins out, we might be stuck in the current place, which puts us at a very high place to end the summer, of course, but we will see where all of that ends. And then we've got the hypercores that also lost a little bit of ground from a market one-year high point, almost at 450,000 for a hypercore, stopped the descent at 400,000. So there's clearly, you know, the market realizing that the real life money conversion for these pilot services is now a step up. So we're not going to go back to a 300,000 normal hypercore price. We have to accept that this margin is here to stay, but you know, it's also willing to go, hey, summertime might just not be that good for the Hypernet relay, so we are losing a bit of ground here in what feels like a more structural way. 400,000 for the sellers, 390,000 for the buyers. Moving on to the minerals, coming in at 11 minutes. There we go, giving me time to quickly drink a bit. Like that, let's take a look at titanium first, of course. So here is titanium on the chart, pretty much starting to move sideways. You can see 5-day, 20-day moving average all pretty much flat. For the week we are down a little bit in price, but we're staying well above that 3.5 ISK. So we're at 360, 370 for the sellers, actually a decent amount of them just outside of JIDA, and then in JIDA itself 369, 370 coming into play, but here 100 million, 100 again, 100 again. So there is plenty of supply in my opinion, but demand is strong enough as well, which I think is normal. If you're expecting some problems in nullsec, you might as well invest in some extra production capabilities for larger ships at the moment. Here you can see a buy order of 1.4 billion units at 357, and here another one at 353 of 2 billion units is keeping things quite in check. So it's definitely not a great price on this one-year chart, but considering the summer slump, I would say that this is still quite okay. If you are producing titanium and you need the ISK, I would actually not hesitate to be selling. If the activities do decline substantially over the summer and nothing happens in nullsec except a wet fart, then you know, we might be challenging that 350 decently quickly, because a couple billion units is actually brought in quite easily by high-sec miners, I would say. Then we've got a pyrite. Let's take a look at that chart first. Sort of the same story, pretty much flat over the last month or so, not really going anywhere. Of course, again on this one-year chart, you'd rather sell for 15 to 20 ISK, which for the first half of the year was possible, than below 10, but we are not crashing down from the current price range either. 927 for the sellers, 864 for the buyers. So here I would say less of a pronounced bottom. You can also see that those big sell or buy orders, yeah, they're staying above 8, but that's still a ways down from the current average. So you got to be a little bit more careful, I would say, with pyrite. If things go south, then I would say pyrite will probably dive down first and titanium will be next. And then finally here for high-sec we also have Mexalon. I would say, yep, same story. Slight pressure at the tail end here, but overall we're just hovering around the 60 ISK mark for Mexalon. Just below that for the first sellers now, 57.50 for the buyers. It's 5 million units, and then we're back above 60, but we are starting to challenge that a little bit. Do we see big buy orders? 57 here, 48 million here at 55. I would say there is strong enough demand for Mexalon. It is probably also still one of the first bottlenecks that nullsec encounters if their industry goes all out. So yeah, Mexalon 60, okay in my book to try to produce and to sell, and considering the other ones, obviously in high-sec, try to focus on Mexalon if you can. Then moving on to low-sec, here is Isogen, and that's interesting. I did not expect that to happen, although looking at what's happening with Plex, I'm getting the vibe that Nelsik may just be drawing in a little bit of activity that was not expected in my summer slump theory, and here we are. A side effect of that could be that Isogen is going back up. If Noxium is going back up as well all of a sudden, then I would say that there is a chance that increased demand, at least for industrial output, is starting to show up. And so Isogen making its way above 400 ISK here, 450 now for the sellers, 410 for the buyers, and you still have, you know, those supplies that might even be replaced from time to time. Look at that, all of these in the last 24 hours in the 20 million unit vein, 70 million units waiting for us at 453.90. But can you blame people that have reserves that all of a sudden see a 450 plus for Isogen as a possibility? Obviously some of those are still coming out, but again, we're not talking 400 million billions of units that are coming in. This is actually absorbable by the market, especially if under the Siege Green update there is more demand for minerals in order to create more larger ships. This could really become another step up for Isogen, where again some reserves are stalling us a little bit, but the actual price, if the economy would go all out for Isogen on active supply demand, could be even higher than this price point. And let's see if we still have that massive order awaiting us at like 1100 or something like that. So you can see supplies are coming in, but a couple million here, 100 million units here, but here we go, 200 million units. Someone is expecting 1200 ISK to be possible. I don't think within 35 days that will be possible unless Nelsik completely blows up. I don't see that happening, but you can see that there are already, in my opinion, speculators with big holdings of Isogen that are expecting way higher prices than what we have now. So let's see if Noxium is turning the corner as well. No, that's kind of strange in my book, but 1 year low point, Noxium going below 1000 ISK on this one. 978 for the sellers, 951 for the buyers is clearly a counter trend to what we're seeing in Isogen, which is an indication that maybe there's not that much extra demand out there, but it's just still that problem for Isogen that what's actually being produced under the new circumstances is way lower than what we're used to, and it's still those reserves that are keeping things in check, although they are obviously on this 1 year chart slowly faltering and pushing us to higher and higher prices. So Noxium below 1000 is definitely relatively cheap if you look at this 1 year chart here, and then you think that in Nelsik enough might happen to turn the corner on demand, then this could be a nice jumping point. Of course, you are buying Noxium below 1000 ISK, which is below the entire chart for the year. I'm probably going to do that myself. Then we've got Nelsik, which comes in with Zydrine. That's testing even higher prices, going towards 1800, 1900 on this one. Yeah, almost 1900 at the 1 year high point for the week. That is not doable for the market longer term, so we are pulling back from that a little bit, but 1800 still almost for the sellers, 1400 for the buyers. Bit of margin opening up here, so clearly there is a little bit of playing, a little bit of activity that is not just we're supplying the market and there's regular demand, but this is a real shock to the system where the buyers are saying that's a little bit high, we're staying 400 is below things, and they're probably grabbing some of that as well. Although look at those min-max prices below 1400, you got to go back 10 days for anything to actually be sold here. So Zydrine is in a real supply shock from what it looks like. Is it manipulation? Is it just Nelsik that's really having to cut down on what can be brought in because the focus is somewhere else? We know that the Imperium has also announced or done a deployment. I'm not exactly sure what's happening out there, but this means very, very expensive Zydrine at the moment. And then Megasite, you may have seen that on the ticker, is taking that little bit of a pause. Did go up to almost 1750. And then going back down now at 15 under disk, I think 1537, and the buyers are just above the sideline buyers at 1450. So here you can also see the chart is a little bit more, some buyers are picking up some of that mega site below 1500 as well. So here we get a little bit more supply, which is, has been the story for mega site. How is it able to keep its price below the sideline price? It's probably because there are other sources than nullsec for mega site, like remote space, like the Triglavian systems that are, adding supplies that are enough to keep things a little bit more steady than what we're seeing in Sideline. This is kind of crazy. Look at those min-max prices here. That's the average price actually at the low end went up to the low end for 19 under disk, but people actually sold Sideline up to 2000 disk about a week ago, which is very, very high, of course. And then finally, we've got the Morphite chart that is showing a little bit of sign of strain and dipped below 40,000 disk on this one. 41,270 for the sellers and just below 40,000 for the buyers. So margins closing in on the downside, perhaps a slight oversupply situation that is starting to form here. Next, we've got the PI market 2020. All right. There we go. Let's see what's happening here. General trend at the moment, min prices are holding steady. This actually feels like a pretty steady chart, just below 1.5 million for broadcast nodes, 1.4 to slightly above that for the sellers, 1.3 million for the buyers, and not a lot of buyers compared to sellers at the moment. So again, be careful. There are two possibilities in my opinion. If I look at everything that's happening this week, nullsec could drive enough activity that we will stay steady, and then pilot services could make new highs, or we could have the summer slump, and you can see if demand dries up another 10% down, then you could really have a problem in the PI market, in my opinion. Construction blocks though, definitely below that point, although that range seems to be just spreading out massively. The average prices, 5-day moving average, shooting up towards 9,000 disk. 8.2 for one seller, but that's another one of those errors probably. 9,300, 9,400 for the next one, 9,500 coming into view, and 10,000 disk on the front page for the sellers. And here that's definitely a different demand picture. Buyers shooting up to 8.2 as well. So construction blocks quite hot at the moment. Don't think it's that difficult to make either, but you're getting 9,000 disk for that. Definitely not bad for a refined PI material. Coolants is stalling its recovery, you could say, settling down below 10,000 disk, but I think we could safely assume that this will be its new normal range, because the water consumption throughout the entire economy, I think it was here or here somewhere during the Siege Green update, has been nerfed, which means that for coolants it should be slightly easier and cheaper to produce them. As a result, we do have coolants that are, well, not at the one-year high points. They were crazy at 12,500, but still 9,300 for the sellers, 8.8 for the buyers. It's a very, very good price, especially considering the last couple of years where we've been struggling to get 6-7k for some of our refined PI materials. Enriched uranium doing a jump up this week as well, going well above 10,000 disk. So 11,000 for the sellers, almost 10,000 for the buyers. Great price considering everything else on the PI market. So that's not bad. And then demand wise, definitely pretty strong demand here for enriched uranium as well. Integrity response drones losing a little bit more ground, but that's of course quite relative. 2.5 million on the Siege Green update, the big winner of that Siege Green update in the PI materials market. We're back below 2.5, but only just at almost 2.3 million for the buyers. Very expensive. With maybe one warning, right? Demand wise, you can see that we can drop off quite sharply. It's only a couple hundred for every buyer. If you get sellers at 1,500, 1,700 units, we are seeing more supply than demand in the advanced PI materials. Mechanical parts, slight pressure, but 10,000 disk in play is definitely not bad. 10.5 for the sellers, 9.5 for the buyers. Normal margin, I'd say well supplied, good demand. This is not bad. So for those like me that have always stayed on that simple and easy PI setup, which is to just go for refined PI materials that I can make on a single planet, this actually looks pretty damn good, as demand for those refined PI materials seems to be holding on quite nicely, seems to be quite strong. It's for the top end where I'm seeing some first signs of trouble. Miniature electronics though, ooh, that's very nice. 1 year high point formed all of a sudden. Big buy happening right here of a lot of units, 3-4 times the daily average, pushing prices up to 13,200 for the sellers, 11,600 for the buyers. And I think I'm actually holding some miniature electronics somewhere. Is it Jida, is it Demar? I'm not sure, but I definitely have some of these. So 1 year high point, an early summer sell opportunity in a refined PI material. Not what I was expecting just a couple of weeks ago, but here it is. That's a lovely chart. So if you can bring this to the market quickly, you're looking at 13k for a refined PI material. That's quite crazy, very unusual, something we haven't seen in many years, I would say, at this point. Nano factories pretty much flat at 1 million, maybe a bit of pressure at the tail end. 900,000 for the sellers and 900,000 for, so this again could be one of those sell order mistakes. 930, 970. Look at that supply though, not very ample. Demand not that great either, but at least there is some nano factory demand out there to keep things in check. So weird markets on this one as well. Advanced PI is basically struggling, I would say, with finding its footing, which all of the smaller ones, the refined PI materials, have been able to do. Organic mortar applicators, a late bump after the CH3 update pushed us above 800k, losing a little bit of ground on that. 720 for the sellers, 678 for the buyers. Plenty of supplies, and here clearly again, losing any more demand could be problematic for the price of these organic mortar applicators. Recursive computing modules, first one to really break down. Here we go, 1 year low point below 750,000, 800,000 still for the sellers, but it's buyers that are drying up, going below 700,000. Robotics though, specialized PI material, I did not expect this again. Summer has started and robotics makes a 1 year high point on a slow upturn above 70,000 ISK. We're talking at the moment 76,000 for the sellers, 74,000 for the buyers. Where is all of this demand coming from? Kinda nice, of course, for those that are making PI, that are just steadily producing that in not too large a scale. I think once you scale up, you automatically will want to at least in some part go to the more lucrative, potentially so higher end items, but those are struggling. But look at these robotics, another 1 year high point, very impressive. Rocket fuels climbing back above 11k as well, 11.2 to 10.4. So again, slightly lower margin, decent supplies of course, but also very nice demand for rocket fuel. Self-harmonizing power cores here, losing a little bit of ground, but another one of the Siege Green winners, obviously. Are we still above 2 million? Yeah, by quite a bit. 2.2 for the sellers, 1.8 for the buyers. Same warning, right? These are all of the sellers, and then the buyers, that's it. So we could see a first demand crunch in advanced PI material. How will that translate in the others? I'm not sure, but I would definitely, sell a little bit, especially on those 1 year high points. Then we've got smart fab units also doing quite okay. Sellers coming in here at 64, 70k pretty quickly. Not a lot of supply. Demand is not great, but I think this is one of the best sell prices we've seen, except here for a spike up to 90k in March. But generally speaking, we're definitely above most of the chart at the moment. Then we get sterile conduits, advanced PI, a little bit below average and clearly struggling as well to stay above 1 million for the sellers. First sellers coming in below 1 million, 830,000 for the buyers. Slightly better demand in the amount of buy orders, but volume-wise, actually doing kind of okay. This could be the one that's like able to hold on this slightly below average price. for now. Then we get supercomputers. These are not doing too well, also losing a bit of demand, but 70,000 for the sellers, 62,000 for the buyers. That's still an okay price. It's just demand is struggling here as well. Then we've got synthetic oil just coming down from a 1-year high point at 10k. So not all of them can make highs at 13k or anything like that, of course, but you always do have to look at the full 1-year chart. So just about 3 weeks ago probably could have sold above 10k, which was your best price for the whole year for synthetic oil. We're losing a little bit of ground on that, but still 9,000 is for the sellers, 8.2 for the buyers. It's a pretty damn good price. Synthetic synapses also coming back down from another 1-year high point, pretty much above 100,000 discs. So tied to implants was doing quite well as well. 92,000 in fact for the sellers, 80,000 for the buyers. And this is the one that or one of those that I would say is pretty interesting if you're looking to actively trade and you want chances to buy low, which would be below 75k on this chart, and then sell high 100,000 disc on, you know, something happening in EVE around implants. It could of course be that implants become part of a reward track for one of the events, which are like now something that's really just part of the you know, cycle in EVE Online. Just constantly events coming out, and you have a chance. You can see that here, 1, 2, 3, 4 clear spikes that implants are somehow related to stuff. One thing to keep in mind though, if this is a play that you want to make, is that CCP did announce that they're looking at attributes, that they're looking at basically normalizing training speeds across the board, and that could potentially have a big impact on implants, because, well, most implants probably have something to do with attributes, and that would potentially get completely gutted from the game. So it's difficult to say that you know, everything that's happening, you know, implant wise is gonna cause a bump here. What if CCP guts all of the attributes? That could actually be one where, you know, players would expect the amount of implants going to drastically drop in the game, and then prices could go down substantially. It's a possibility. Then we get transcranial microcontrollers, not as good on the 1-year chart, but 100,000 at a high point. Here we get probably 80, 90k on this one, on the bump here as well, 85k, and then we're losing a little bit of ground at the moment, 81,000 to 72,000. But it also gives you an idea if you're seeing a low point and you want to take that implant gamble. These are two possibilities. Water-cooled CPU, one of the exceptions. Refined PI materials still stuck at 5,000 disc, a very, very low price on no demand. So no one needs water-cooled CPUs at the moment. And then we get to Weightware mainframes, which is actually one of the PI materials that has still been gaining over the last couple of months, up to 1.6 million for the sellers, 1.5 million for the buyers. So PI is also kind of surprising me and edging me towards a summer slump. There's gonna be some decreased activity, of course, in definitely some parts of the game, but perhaps Siege Green and some Nulsic rumblings could keep us standing and could maintain some decently high prices for PI. At least all of the, or most of the refined PI materials are doing really, really well at the moment, and that's exactly what I'm producing. So I'm definitely gonna look at unloading even more. I have been selling over the last couple of weeks, but I'm looking at unloading even more at the moment. I think it's a great time to sell whatever reaches close to high points. Next, advanced moon materials coming in at 32.40. There we go. Let's start with the carbides as always. Let's see if we have a floor or if we were catching a falling knife. And crystalline carbonite for Galente back below 100 disc. We're talking 93 now for the sellers, 87 for the buyers. So we're still not at a 1-year low point, but I would definitely say that bottom formation is still not a certainty. You can even see daily average, 5-day moving average back below that 20-day moving average. So clearly pressure is back on crystalline carbides. Last week the Caldari one, titanium carbide, was really the exception, and it did manage to make its way back above 150, but pressure is starting to be visible. 140 now for the sellers, 140 still for the buyers as well, but get rid of a couple million units and we could go back down very quickly. You can see 5-day moving average 20, everything coming together. The question is, will it break down? Will new supplies keep pushing us back down as well, and then will we get maybe close to 100? It is a possibility, of course, so difficult to say. Then we've got Minmatar. Here is Ferrite Carbide that is just slowly pulling away. This one is slightly different in the way things have been going. It's not really like bouncing up from the 1-year low point and then having to go back down, but this one is just slow and steady. Oh, this is God damn it, this is the wrong one. This is what I needed, Ferrite Carbide, and that's the bad news. All right, sorry guys, my mistake. Yeah, that's kind of confirming that the bottom is not in yet potentially. Here is Ferrite Carbide back below 100. This constant pressure over the last week. 89 for the sellers, 85 for the buyers. That's gonna be super close to a 1-year low point, if not the 1-year low point at the moment. So yeah, just a couple of weeks ago and last week I think I was like, maybe if nullsec action could cut down on supplies, this was the bottom already. Clearly in my opinion at this point that is not the case. And then we've got tungsten carbide for Amar. That's the right one. Yeah, that is the right one. So slight bounce again from 100 disc, but again at the tail end you can see everything is coming back together. So we might be seeing pressure yet again. 106 to 102, still definitely not a great price. So I would be careful. The upcoming weeks could be very interesting for where the hell is the Caldari one. Titanium carbide. If this one really breaks through that 5-day moving average, through that 20-day moving average, I would be very careful on everything else. And the fact that the Minmatar one just made another 1-year low point pretty much is not good news for those that are, you know, looking at last week or a couple of weeks ago as the jumping point for advanced boom materials. It may be that we're still too early. Then we get our metamaterials. Here is photonic metamaterials for Galente, also showing signs of pressure, touching 7.5 here, 7.5 for the sellers, 7,000 disc for the buyer. So clearly there is still potential to go even lower. Then we've got Caldari with nonlinear metamaterials landing on 12.5 pretty much, 12.9 for the sellers, 12.4 for the buyer. So that's still, you know, away from the 1-year low point, but also still 5-day back below 20, so pressure is visible here as well. And then we've got our Minmatar. So here is plasmonic metamaterials, bit more volatility. That's definitely interesting, and in my opinion this could be tied to the war, tied to nullsec at least, if we don't want to call it a war at this point just yet. But yeah, Minmatar ships, I think there are still some of those that are in the meta of the largest blocks into the game, and so them buying up these plasmonic metamaterials at 10k and pushing the price up to 15k could definitely make sense. They're saying that's all really cheap resources for us, that makes cheap ships for us, and as a result we are going to jump in. And you can see this is the second bounce that we have seen this way. So just a month ago, 3-4 weeks ago, you could have bought plasmonic materials for around 10k. Now you're selling above 14,000 disc, 14,000 for the buyer. So absolutely that 40% increased value, that 40% trade was possible here. But in my book, this is not like a structural trade that you're making. You are trading nullsec demand at this point for a very specific type of ship and thus production line. Then we have Amar left. Here is terahertz metamaterial. Pressure is back here. You can see we're landing on 10k yet again. 10,000 now for the sellers, so gotta be careful. Buyers 995, but the question is who will win out? And if you look at the volumes, then I would say that it is possible that sellers will push us below 10,000 disc, even for terahertz metamaterials. And so the bad news, I would say, for those that are already looking at a certain investment, well, we've got the, where is it here, Ferrite Carbide 1-year low point that's being formed right now, and if pressure continues a little bit, it's going to be structural, and that could tell the market that, yeah, even 100 disk for carbides is not exactly the bottom. We gotta look for an even lower price point. And then we've got the same story here, in my opinion, with terahertz metamaterials. If I look at these volumes, we could really push through that 10k and decide to start trading below that instead of above that, and that could be very dangerous for all of the others, in my opinion, as well. I mean, Caldari has that innate extra demand because it is the most popular race, and I think also, right, shields, missiles, it is of course an amazing combination that they do have, but I'm not sure if a 25% markup for nonlinear metamaterials is something that's that sustainable if we're in a real oversupply situation. So I would say you could still look for the right jumping points, and obviously Fahrenheit Carbide looks very juicy at the moment, but catching a falling knife should still be at the back of your head. This could still not be the right averages that we're looking for just yet. For the other advanced moon materials, here was fermionic condensate, my mistake from before. That is, well, starting to again move sideways away from the bottom. I'd say that's actually good news. 45k to 45k, not that much supply, but if I'm looking at these numbers, then obviously a few 100,000 units could really test us back towards low points, so it could go very quickly. Ferrogel also bumped off, but is starting to come back together. 20-day moving average, daily average 20 as well, and 5-day. So if we see more pressure, that could be very bad news. Then here we get the fullerite away from the bottom, plateauing below 600 disk, but 560 coming into play now, 540 for the buyers. You have to be careful here with the existing pressure from moon materials. Hypersynaptic fibers, right, again sideways moving, but everything is coming back together again. I would not be surprised if next week we get an across the board crossing of the 5-day moving average back below the 20-day moving average, and that we're in trouble. 2.5 to 2.46, so margins between sellers and buyers are just completely evaporating, and then the question will be, is there more supply to bring us back down, or is demand strong enough to keep us where we're at? Phenolic composites, exactly the same story. Pressurized oxidizers though, if you're looking for a sign that there might be even more pressure, look at that 1-year low point right now, below 7,000 for the sellers, 6.9 for the buyers, 15k at the start of the year. That's a loss of over 15% here. That's quite substantial. Reinforced carbon fiber, slow burn towards another 1-year low point. We're not there just yet, but we're touching that very, very closely. 6,650 for the sellers, 6.2 for the buyers. And then here we've got our ceramic fibers, where again we are at potentially that threshold. So be very careful. I would say slow buying at 1-year low points, that would be my tactic personally, and in small enough volumes that you keep lots of powder dry to buy at even lower price points. Let's see if there is an impact on Tech 2 ships next. 41.50. And there we go, and well, I think we'll just look at trends here. So Basilisk managed to make its way back on to 180 million, definitely not a bad price here, and actually a tradable bump in a matter of 2-3 weeks here in June. That was quite impressive. So buy well below 130, sell well above 150. There's definitely a bit of a trade that could have been made here. At the moment though, just like with the advanced moon materials, you're seeing pressure starting to mount again. 148 million now for the sellers, 131 for the buyers. So buyers are just, sticking around that low end of the trade range. And then you can ask yourself again that same question: will new supplies on a wet fart in Nosik potentially, let's say something like that happens, then we could see even lower prices later down the line. And this is Caldari as well. This is where you do have that extra bump from the costs and the just general situation in the game, in my opinion. Then we've got Cerberus, right? Same story, and look at that here. 5-day moving average crossing the 20-day moving average, and those minimum prices going straight back towards 150 million. So the trade definitely not bad. 130 here, 170 here. That's tradable, that's doable. We're back down to below 160 for the sellers and 151 for the buyers. So we could go down very quickly and substantially. And then I think for the armor ships and things like that, this is exactly sort of what I was a little bit afraid of, and why I've constantly, I think, warned you guys to not put all your eggs in a single trade like this. Here is the curse chart, looked really promising, made its way back to 150 million, but look at those minimum prices, they are right back on those 1 year low points. 5-day moving average going straight through that 20-day moving average at the moment. That's not a beautiful chart. That actually signals that we're gonna get really cheap curses very soon again. Back below 140 for the sellers. Here's the demand. It's the demand that was never really there. You get maybe a bit of a bump because of some preparations for nullsig, but that's only in specific ships. And again, I think Caldari coming out as a popular doctrine on that one. But here is an Amar Curse, which is actually a pretty damn cool, useful ship, powerful ship as well, if I'm not mistaken. Let's see what its innate traits are. I don't know if it's exactly... no, it's actually a neutralizer. Yeah, alright, so it's not exactly gonna be in the meta, but Tech 2 hull, all of that stuff. I think it's still pretty damn good. I think it's a drone ship as well. And you're right back that buyers are trying to grab these below 120 million ISK, which, can I get that to show somewhere on the chart, is, yeah, below the entire chart basically. And that means that if you started to buy here on that upward turn, you're again catching, or here on this downturn, you're again catching actually a falling knife, because demand just isn't there at 140, 150. No, it's down here at 120 to 130. Then we get the Damnation, same story, just, you know, sliced right through that 20-day like through butter. Not exactly at the 1 year low point just yet, but this could have enough momentum to get us back there, in my opinion. 283 for the sellers, 275 for the buyers. So still a slight premium from the low point, but clearly that upward shift here, that trend has been broken very swiftly. The Deacon doing a little bit of a bump, but look at those minimum prices. So people are still trading close to the 1 year low point here as well. So that's just a spread that increased, probably no too new supply, and it's already being plugged. Yeah, so we went back up towards 20 million, and then in the last 24 hours, 18 and below. But oh no, actually that's, I would say I'm kind of lying here. No, supplies are trying to take advantage of that slightly high prices. Yeah, I think that's more what's happening. So we did get the volumes here. Kind of looks timed right after my Eve talk, but alright, we'll see if that's true. It is a logistics frigate. I think it will have use for some groups and could potentially be part of doctrine. So you got some buying at this low point right here, 15, 16 million for the average price, bumping us up towards probably 18 million or something like that. But the buyers are just not budging, and they know exactly why, because look at that in the last 24 hours. Here's another 100 Deacons ready for the market, trying to take advantage of just this slight bump of 2-3 million in the price. So supplies are just there, they're plentiful, and it's gonna be very difficult to get structurally above the current range. Eagle is part of the meta, but even this one, you can see here, back under pressure, and we went up to 200 million ISK. Sellers are down to 179 and buyers are down to 150. So those buyers are like, we get all the time in the world, you guys keep producing, bring it, you'll come back down to our level pretty quickly. Then here is the EOS, bumped up to above 300 million as well. I'm kind of happy that I managed to buy mine at 250. I think the EOS is actually a really cool ship as well, battle cruiser that can field 5 large drones. Definitely has something going for it. Went up to 294 this week, 277, but again the trend at the moment is pressure, and we are definitely going back down. The Ares then was not doing so well and is now heading towards a chart below 37.5. Just above that for the sellers, 34.3 for the buyers, and again that's the supply, this is the demand, that's it. So we could see pressure yet again towards 1 year low points. Flycatcher doing a little bit better. Yeah, Caldari again, in my opinion, awesome ship for not just PvP but also PvE. It's got incredible speed, this one as well, but then you get the shields, you get the missiles. So it is an incredible hull, doing slightly better. Bottom was below 40 million. We're selling at 48, buyers coming in at 42. Then we get our Guardian. Exactly the same story. 1 year low point, bumping up to 150. That's almost tradable, I would say, but look at the pressure right now and look where those minimum prices are. They're already below 130. Yeah, 139 to 122 million for the buyers. So the sales, they're not over yet. Here is the Heretic currently doing its bump from that 1 year low point when buyers were touching 30 million ISK up to 41. Buyers are still at 31.5. They're up a little bit, but that's just gonna be filled very quickly. Then we've got the Hound chart here also doing the bump at the moment. How long will it last? I think it's not too long. Ikitursa made its way back above 500 million and pressure is back. Really? 494 to 447 million for the buyers. Well, if you're looking on the 1 year chart and you're looking to fly a Triglavian ship, I would look into a buy order. At the moment, it does look like a good time to jump in. So buying at 20 low points, especially for ships that you're planning to use, I think this is the perfect time for that. For people that are looking to then sell at a profit, that's where you're taking risks. Then we get the Ishtar back down as well, very close to 1 year low point. 128 million for the sellers, 122 for the buyers. And again, here is the supply and this is the demand, so that is not a lot. Very cheap Ishtars at the moment. Again, another one where I would say you could take that gamble, but what are you depending on? You're depending on nullsec, a big group in nullsec deciding, just like here with the Eagle, yeah, an Ishtar fleet is something that we do want. Let's buy 100 of these. That could get you that tradable bump, but outside of that, the structural situation is just that there is way more supply than demand, and that this could not be the bottom price just yet, especially in potentially a summer slump. Kirin doing a little bit better. Feels like that could be structurally back just below 20 million. 19 for the sellers, 17 for the buyers. Then we get the Manticore here, and here is that bump that I was talking about. Very nice to see this. This is definitely tradable, so you could have bought these well below 20 million, probably 16, 17 million just a couple of weeks ago for the Manticore, and we're up to 25 million for the sellers. Buyers are at 19 million, they're up a couple million for sure, but it's still well below 20 for those buyers, so those minimum prices are still stuck right down here. So this is a sell opportunity for the Manticore. With that one warning, in a couple of days it's just gonna be gone, and so if you bought one or two, as I've said, small volumes, then you're not gonna completely break down the market. If you're bringing in a dozen and you wanna absolutely sell at a profit, it's going to start to put pressure on this very, very quickly. So right now, sell opportunity in the Manticore, but don't expect it to last too long. I'm not sure if I mentioned that this felt like a buy opportunity for the Manticore. Have to go back and look, but this is one of those trades. And what's happening here? Is it anything substantial that has changed in Take 2? No, it's this massive volumes, stealth bomber fleet bought by a big group, by nullsec. That is what gives you now these tradable opportunities. Here's the Nemesis, slightly different story here, obviously a slow burn back above 15 million, but I would say that this is not abnormal if Manticores are just below 20, even Hounds are touching 15, and then you've got our, where the hell is it, Nemesis, that goes down to 12.5 million on the minimum price. Yeah, that's a crazy range compared to everything else, so here that you get a little bit of normalization that happens over a prolonged period of time. It's normal. The Nemesis made its way back up to 16, 17 million for the sellers, almost 15 million for the buyers. So those that spotted like a below 12.5 over this period of time or close to that could have really bought those very, very cheap Nemesis ships. And then you got the barometer of the other stealth bombers to inform you that, yeah, this is probably crazy low, and you'll get a sell opportunity out of that eventually as well. That's a tactic that you can try to use. And but again, don't spook the market. Don't come out with 20 nemesis at the time. I think you'll bring us right back to that lower range. But that's, I think, the story here, rather than what's happening with the Manticore, which is far more volatile, more profit, but on a way smaller scale. Here the nemesis, yeah, even if you bought a dozen of them and you're now willing to also slowly unload them at these prices at a smaller margin, you're probably eventually going to be able to get all of that done as well. Then we got the Nighthawk bumped up to 300 million, but the pressure is right back already, 293 to 270. I think the Oneros, same story, right? Pulled away from a 1-year low point, went below 100 million ISK, back up to 130, and now we're like, yeah, the other logistics ships, again, you gotta keep that in mind, right? Basilisk made its way up to 180, definitely above 150. So then where the hell is it? The Oneros selling below 100 million becomes a proposition where, what the hell, that's just not that logical anymore. Let's try to grab a couple. And so buyers are back above 100 million on this one as well. Our other stealth bomber here is the Purifier, double step up to well above 20 million, 23 for the sellers, 19 for the buyers. Could have bought these for 15 million about a month ago, so definitely a bit of a trade to be done here as well. I'd say this is going to be a slight combination. Purifier at 15 million feels like it's pretty low, and then you get a slight bump here on a couple of days for volumes that probably brings us back towards that 25 million. So not bad, and in line with, I do remember that from like a couple of weeks ago, maybe a month ago or so, that I mentioned if I was looking into trading, I would be looking at the smaller ships and at stuff like the stealth bombers, because well, in conflicts, what's always nice to have is a couple of stealth bomber fleets. What's likely to be used and loosed a little bit more like munitions, it is stuff like stealth bombers. And so you are seeing that some trades are to be found in this class of ship, where it's gonna be a hell of a lot more difficult in something like a Rook that's trading 10 a day. And you can see here how flat it is, slightly away from the bottom. We also went below 100 million on that one, 129 to 117. So here you can see those minimum prices touching 100 million. But you can't really get that type of volatility in those larger Take 2 ships. Saber, below 40 million. Where are the buyers? 35.5 million for the buyers. You can see here at the moment you're probably buying close to 1-year low point. Could be something to look into. At least it's 100 a day. It's not as good and as fast, I would say, as something like a stealth bomber for the trading. But the Saber has the volumes to probably make something happen though. Then we've got the Scalpel, very flat, terrible volumes, but it is below 15 million ISK. 15 for the sellers, 14.5 for the buyers. You're buying a Scalpel below 15 million. And then the question that you can ask yourself is something like, where the hell is it? The Deacon, that has known a little bit of a bump, will eventually, right, on enough conflict, even the Scalpel become something to look into, then maybe buying there. But for the short term, feels a lot more risky than, let's say, trying a stealth bomber trade. Scimitar made its way back to 150 as well, so 100 million, definitely a jumping point for some of these logistics cruisers. Here's that 40% profit that you could have made at the moment, not bad. Sleipnir, really flat, 1-year low point pretty much, but the volumes are terrible on this one, 240 million to 224. So again, for those command ships, I've been looking at these low prices to then grab one because I plan to use it, not to make a profit on the trade. Then we get the Vagabond, slight bump above 150 and already back down, so that's not lasting long here either. And then finally we get the Zarmas, that's landing on 400 million on the minimum prices. We're talking 437 to 400 million. Same story, I would say, as with like those command ships. If you're looking to eventually use some Triglavian ships or have those as an option for your personal use, this is the time to look at a buy order for those as well. So the Take 2 ship market, definitely pretty interesting, but I would say that pressure is visible here as well. Be careful not to catch those falling knives. Then the Take 3 market coming in at 57.45. And there we go. Let's start with the destroyers. Here is the Confessor, bumping up from 50 million to probably almost 60. Yeah, 59.5 for the sellers, 51 million for the buyers. Decent amount of supply, but again, a 10 million markup from about 10 days ago is quite significant. And I think this is just pulling this one in line with the Hecate and the Jackdaw, which the Jackdaw is going just below 60 million. The Hecate, excuse me, 58 for the sellers, 59 almost, 55 for the buyers. So that's basically the exact same thing. Last 24 hours, a little bit less supply. It's better to bring in Confessors. And then we've got the Jackdaw. That is also back above 55 million. Whoops, that's a misclick right here. 59 for the sellers, 53 for the buyers. And supplies is actually quite a lot in the last 24 hours as well. In the number of sell orders, the volumes for the ships actually feels okay. So I'm kind of feeling here that we are coming together on at least the Confessor, Hecate and Jackdaw. It's just below 60 million, 55 to 60 million seems to be that new sell range where you at least get enough supply, enough margin to decide to make some of these ships, considering those gas prices that are now being massively, or gas supplies that are massively being taken in by faction ships, and as a result the price is higher. So we are normalizing here. The bad news is, of course, that when we were able to sometimes break 250 and get very close to that on a daily basis, your daily volumes have gone down substantially. So it's going to be even harder to make a trade happen in this category. Then we still have the Zwepel that is stuck at around 50 million, and look at those minimum prices declining again. 51 for the sellers, 44 million for the buyers. So you're not buying any of these for less than 50. 55, 51, 55, 53, and then you're buying this Zwepel for less than 45 million. That does feel kind of imbalanced, but we have to admit that for most of this chart here, this Zwepel just has been decoupled from the other tactical destroyers, and even when those have crazy volatility, like right here with the Jackdaw, I think the Hecate's got a crazy spike as well. The Confessor's got 1, 2, 3, 4 spikes and is now doing another one, right? This is nice volatility where you would think these waves would ripple through the entire destroyer market, and then this Zwepel just goes nowhere, stays below 50 million for most of the year. So it is very difficult to say, yeah, this actually looks like a jumping point for this Zwepel. The one theory that I could say where this is a good idea is if you know that eventually Nullsec is a group in Nullsec is going to say, yeah, a fleet of cheap Zwepels, why the hell not? It's so much cheaper than everything else. Let's do that. Then you will be happy to have bought a couple of Zwepels below 45 million. But will that happen? Yeah, very difficult to say. Look at these volumes as well. They're absolutely abysmal at the moment. For the cruisers, here is the Legion chart. Clear pressure, buying below 180. All right, 186 to 168. You're buying below 170 million ISK at the moment. To me, feels kind of interesting, and you can see how wavy the cruiser market here has been. Yeah, I would say if you're looking for a trade, I'd rather buy a Legion than a couple of Zwepels at the moment. Loki also seeing pressure, not yet at the point I think where I want to jump in. Yeah, 190, 1 for the buyers, 203 for the sellers. That's definitely still too early. But if this has more momentum and we start to get close to a 180, that might be more interesting. Then we get a Proteus pretty flat here, or slight pressure, but you can see the minimum prices starting to pull down at least a little bit, but yeah, still not enough, of course. 196 to 184. We need to see buyers below 180 before I jump in on that one. And then we've got the Tengu, very sharp drop off here with buyers straight below 180 as well. 193 to 172. I would say if you're looking for that active trade right now, where I would say there's a good chance that you're making money on a decently short time frame here, we're talking a month or so, then I would look into Legion and potentially the Tengu. So that's interesting. Pretty sharp drop off here, and definitely a very low buy price range. This is the right time. This has the right momentum. If you're putting up a good buy order, probably just above 173 here for the Tengu. You're gonna grab it. For the Legion, I'd say even below 170, you get a good chance of still grabbing one of these, and that looks pretty damn good on this chart. And then finally, we've got the extra product, and someone requested I take another look at the gas markets. So let's do the gas cloud materials. That's coming in at 103.20. All right, let's get started here first with the full range, I think, and we're just gonna try and do general trends. I know that request was actually to take a good hard look at the gas markets. Don't exactly have the time for that at this point, but Fuller Rights had a massive spike here in May, and he's absorbing that, but he's staying just below 10k. I would say big volumes and still quite expensive. Then we get C32, right? Massive spike here in May as well. 1 year high point, almost 30k on a couple of days. We're still at around 20,000 disc, which is still big volumes and very expensive. C320, here's the May spike again. That has been absorbed, but are we back close to 40k? Yeah, 38,570, so almost 39,000 for the sellers. I'd still put that in the pretty expensive bracket. C50, definitely still a bad and bug chart, but here's our May spike yet again. Here, slightly better. We're talking 5,000 for the sellers though. That's still, yeah, that's still pretty expensive for the last 6 months or so. Then we get our 540. Here's the May spike that blossomed into a June spike up to 70,000 disc, and we're still at 60k at the moment, so I'd still put that in the pretty expensive category. C80, here's the May spike, 1 year high point up to almost 9,000 disc, back down to 2.5. So we have normalized, but we're clearly paying a premium compared to the last 6 months, 6 to 4 months, 6 to 3 months, something like that. January to April was really cheap. Then we get our massive spike. We recovered from that, but we're still pretty expensive, still paying a premium. Right, very pronounced right here. Fuller Right C70 went up to 7.5. We're still selling at 5, yeah, 4.9 pretty much. And then our C72, yep, same story again. May spike, and C84, here's the May spike yet again, and here is the margin compared to the start of the year. So for the full arenas, that's basically the story. Massive disruption in May, 1 year high points across the board. These have been absorbed finally, things have calmed down, but we're still paying a pretty big premium compared to what we paid in the first 4 months of the year. Then we've got our booster gas clouds with the Cito and the Miko. Exactly, here is Amber. So here we had a very expensive, that's interesting actually, it's not a bad chart looking here at affordability. So for the Cito we got a very expensive start of same 4 months of the year, and then we're back at 50k, which on this entire 1 year chart is actually a pretty low range, 54 to 37. But what does the Miko chart do? Here we get our May spike, and we again still have that massive premium. We're in fact still trading at pretty much the highest price point for the entire year. So this is a little bit more in line with like oil prices in real life, right? When above 120, 130, something like that, I think. We're recovering a little bit from that, but we're still super expensive on the chart. So for the Cito here, I'm expecting the same story. Yeah, pretty inexpensive at the moment. And then for Azure Miko, there we go, spike up in May, and we're still at just below 50k or something like that for the sellers. Yeah, 50 to 60,000 disc, still super expensive Miko Cerosin across the board. And I think this is going to be a trend. Well, Celadon Cito coming from a 1 year low point, a little bit of a bump here, probably not going to be too much to say. And then here is our Miko that just went up to 130,000 and is now landing on 100,000, which again is just a high range for the entire year. Golden Cito, 1 year low point. Golden Miko, just a couple of weeks ago, 1 year high point at 130. It's now landing on 75k, which is again still above the entire chart for the first 10 months of the year. or 10 months of last year. Then we get Lime Cito, which is at 75k, actually not that great in volume, so it feels like that's still doable. And then Lime Miko is just plateauing just below 100,000 disc, super expensive. Malachite Cito, 1 year low point. Malachite Miko plateau at a 1 year high point of 100,000. That's double the price, over double the price from a year ago. Vermilion Cito, our first Cito Saracen that's doing something different. That's basically following the other trends. A May spike, 1 year high point, 150,000. So that's triple the price in the matter of 10 days or so. Crazy high. We are recovering from that, and we're basically still paying a slight premium from that start of the year here. It's 79,000 for the sellers, but demand seems to be dropping off quite sharply down below 70k. Vermilion Miko then, yeah, Miko, that's the story, may bump up to 75k, and we're still trading well above the entire chart. Viridian Cito, yeah, pretty much at the low end of the average, and then it's Miko back above 100,000 disc, again paying at a massive premium. So for gases, yeah, you're looking at a very clear picture with fullerenes all having those May spikes that have been somewhat absorbed, but we're still paying a premium. Then on the booster gas clouds, you get the Citos that are inexpensive, most of them, and then the Mikos that are all very expensive at the moment. And we'll take a quick look at some compressed, but that's still a pretty big list, so just gonna do a little bit charts. You see it's a new product that only exists since the start of April. We get slightly declining prices here in Cito, and then Miko is plateauing quite nicely. So here we get Azure Cito declining, Azure Miko that is holding on to its value. Our Celadon, that was our one that spiked as well, is responding quite well. And then our Celadon Miko, again, very expensive. And then on our Fullerites, we've got actually that May spike as well with that recovery, but still the premium. Yeah, you can basically see that that gas market is being translated quite well, I would say, in the compressed versions of this one. So it is being used, and it's got very strong correlation between the compressed gases and the regular booster gas clouds that are being sold on the market. And the story, yeah, actually for most of them we are still very expensive, and I think that's still that same reason why our tactical destroyers are so expensive, because a lot of supply still has to go to faction ships at the moment. And there we go, guys. That's going to be it for this EVE Talk. Thank you very much for watching, and as always, I'll see you next time.